Hello, everyone. I'm Ron Insana, the CEO of i-fi.ai. I just wanted to swing back and have a chat about the current state of the S&P 500, which, of course, has put together an 18% year-to-date return, already on pace to exceed last year's gains. In the third year of a presidential cycle, by the way, typically the strongest, with the fourth year the second strongest. Right now, it's on pace to do exactly the opposite and outperform last year's rather sizable gains. Now, what's interesting is that our 30-day forecast for the S&P 500 have tracked extremely closely so far this year, with the exception of the month of April, unexpected 5% pullback. We have seen the S&P 500 track along with our forecasted rates of return, which are extremely, I think, impressive from an AI perspective. These tools that we offer to you with our partners at IBM and Watson X have been pretty right on the money when it comes to tracking the S&P 500. You can see the spider up in the left-hand side of your screen there, depending on which way you're looking at the screen, I should suggest. And I'm going to go in there and show you what the expected rate of return for the next 30 days is, which is 3%. And that is a rather sizable move for the month, but we've seen solid performances so far this month, with the benefit of expectations that the Federal Reserve will lower interest rates. Now, if we take a look at a graph of the S&P 500 versus the forecast produced by i-fi's AI Assist, you'll see that it is tracked quite closely, particularly since the end of the correction, where in the last couple of months, we've hit it pretty much on the button when it comes to tracking the S&P 500. Now, on a daily basis, we ingest a million pieces of information that go into our 30-day and one-day forecasts. I've talked previously about how the one-day forecast may influence one's stock options trading, particularly for zero-date single stock options traders. This, of course, is a slightly longer-term forecast for those who trade ETFs, the SPY, the SPDR being the most popular of those among the ETF universe. Now, of course, there are others which track the NASDAQ, the QQQs, which track long-term interest rates like the TLT. The S&P, though, has been, of course, the most heavily traded ETF effectively in history. And right now, we feel that the improvements we've made to the forecasting models, the improvements that are yet to come, will help individual traders and investors make better decisions when it comes to playing the stock market on a short-term basis. We hope this was helpful, and I'm Ron Insana. We'll see you again soon.